So without further ado, let me introduce the man, the myth, the legend, Ethan Pennar.
Thank you, Ed. Good morning, everybody. I'm happy to be here with you. It's a nice introduction to hear that you're somebody's hero. I mean, I don't know if I have 5 kids. I'm hoping one of them at least feels the same way about me. But you know, Ed's a hero. And I think everyone here who knows Ed knows that. And heroes are people who take risks and make sacrifices. I was thinking about what is a hero. It's just funny that he mentioned the word hero, because the word hero had been on my mind for a while. I'm a big basketball fan, and Dr. J wrote the foreword, who's a good friend of mine, wrote the foreword for my book. So if you're not impressed enough with me to buy the book, well, how many people in business had Dr. J write their foreword? So that might maybe inspire you to buy the book. But you know, a lot of people, I traveled a little bit with him recently. He helped me in promoting the book, and the word hero came about, you know, because he's a hero to many people. And I think people look at him and say, well, he's a hero because, well, he was an incredible basketball player. And he carries himself in a very, very uniquely dignified way. But I think I started to reflect, well, what makes a hero as I was hanging out with him? And I came up with those 2 things. Heroes take risks, and heroes make sacrifices. And Ed is a hero for that reason. And I think probably many of you are heroes as well. For me, you know, this movement towards tokenization of real estate is a very logical, it's just a very logical step. It's obvious. Kind of when it happens and how it happens and the pace at which it happens is unknowable, really. That it will happen is 100% certain, right? I mean, 100% certain. Because it doesn't make sense for it not to happen, right? If you owned real estate, you would want it to be in token form. You would want there to be a digital record. You would want it to be easily transferable for a million reasons, and it wouldn't matter who you were. And so when it's kind of I look at an idea and I say, okay, well, who does it serve? And if the answer is it serves everyone, okay, well, then it's a no-brainer. This is a no-brainer. So the questions, you know, Ed mentioned that I brought about kind of industry-wide change in real estate. And I think it's worth talking a little bit about that and kind of what I encountered to contextualize the challenges that Ed and his team and this movement of tokenization face. So I came about from the world of securitization. So the Asians, right, the tokenization and the securitization, all the Asians, right, taking action to make change is really what that really means. And securitization was very novel. It didn't exist really before I got out of college, right? I got out of college in 1982. And like most people out of college, I didn't know anything. I didn't really learn anything of value in college except maybe how to present value cash flows and what that meant, which turned out to be something valuable. And I ended up stumbling and bumbling my way through the mortgage market, which was the dregs of finance. That's where idiots went in mortgages back in the early 80s and the 70s. So I was an idiot out of college with no experience, and that's where I went. I was relegated to the bottom of the bottom of the bottom of the barrel. I was at a savings and loan as a loan underwriting trainee. I mean, you couldn't start lower than I started in the world of finance. But a miracle happened, and the miracle was that securitization of mortgages started to take hold, and no one had more experience than me. You know, so I found myself at about 3 years into my career. I'm 24 years old, and I realized that Wall Street is now, instead of looking down their noses at mortgages, they're now desperate to figure out a way to get into the mortgage business. But there was no prior experience on Wall Street with mortgages. So my 3 years in the S&L industry qualified me as an expert in that world. And I was able to kind of, I don't know, talk or sell my way into a job that was brand new, which was trading mortgage-backed securities on Wall Street, and I had as much experience as anybody else, so I was an expert. And I mean, that's an instructive start to the story in the sense that one of the things I've learned since then is that if you're going to be a change agent, you need to know how to sell. So to know how to sell, you have to understand who your audience is and what do they want and what do they need, and then you have to communicate your ability to deliver that. And so I learned that in that very first foray, moving myself from the savings and loan industry, which even in my very, very young ages, I understood was hopelessly doomed to fail, the whole industry, and moving my way into Wall Street at the very beginning of the securitization movement. So I started that way and found myself after a year or two, well, I had the most experience and expertise of anybody on Wall Street of any age, and I was 25 or 26 years old. And Morgan Stanley recruited me from Drexel to build from scratch and run their entire mortgage structured finance trading and finance business at the age of 26. And it was incredible, just so being in the right place at the right time with the right experience meant a lot. And of course I could have fallen on my face and failed, and luckily I didn't. So I built that business, and I started to see what naturally happens in markets happen, which is the grinding of efficiency, right? So efficiency is the enemy of intermediaries, traders, investors. We hate efficiency because efficiency takes away yield, it takes away profits, it takes away opportunity. And as someone who's always looking for profits and for yield, I naturally gravitate away from efficiency towards inefficiency. And I started to focus away from the increasingly efficient single-family mortgage business to the highly inefficient commercial real estate business. And I fell in love with commercial real estate. I fell in love with commercial real estate primarily because it defies efficiency, right? You think about this building that we're sitting in today has absolutely nothing to do with an office building in Memphis, Tennessee, or a shopping center in Akron, Ohio, or a hotel in Beverly Hills, California, and yet they're all called commercial real estate. And so when I realized this business defies homogeneity, I understood that this business will always be inefficient, and it will always reward people with different skills, better skills. And for me, that's the most important criteria for being in a business. Like, I don't want to be in a business where it becomes so efficient that the talented and the untalented have the same opportunities. That's not interesting to me. Or the hardworking and the lazy have the same opportunities. I love a business that's inherently inefficient because it rewards people who work harder. It rewards people who are better at it. So I decided I'm going to make my career in commercial real estate, and it was a very good time. It was almost a very good time. So in the late 80s, commercial real estate benefited from the biggest capital flows that you could imagine, bigger even than the period of time between 2017 and 2020 or 2021. And again, what I learned as a trader on the trading floors of Drexel and at Morgan Stanley is that everything in the end has its price determined by flows of funds. So if there's a lot of money chasing anything, its price will go up, and ultimately to stupid levels. And when the money flows out, its price will go down, usually overcorrecting. That's just the nature of the herd mentality of markets. Well, in the late 1980s, there was so much money chasing commercial real estate in the US from the whole world. If you remember, for those of you that are older, the Japanese literally bought Rockefeller Center. They literally bought Pebble Beach. And because of those two purchases, Rockefeller Center and Pebble Beach, the stupid US Congress enacted something called FIRPTA, which is a tax, special tax that inhibits foreign buying of commercial real estate in the US. I think they were afraid that we were going to be taken over. They didn't realize that the foreign money was coming and the buildings were still staying here. They were too dumb to think that through, but that's our elected officials. So unfortunately, they created a little bit of a barrier that we still suffer from in this industry that is a natural repellent to foreign investment in the US real estate, which is really bad for us as a country. But to give you an example of how capital flows can create mispricing, I was starting to think, gee, this whole securitization thing ought to be applied to real estate because the bond market is flush with capital, and unlike regulated lenders, the bond market is always there. It's just a matter of price, right? So if you think of any bond, there's always a price it will trade, and this is very instructive for the market that RedSwan and you guys are all looking at. The bond market is a great analog because what's very valuable about the bond market, as I'll emphasize it, is they're always there 24/7. If I own a bond, it could be a bond backed by Apple, it could be a commercial mortgage-backed security, it doesn't really matter, I'll get a bid. It may not be a bid I like because in that moment in time, the credit worthiness of that bond may be suspect, but I'll get a bid. That's very different than banking and insurance lending community, which is the other side of providing debt financing, because banking and insurance lenders are influenced in a herd way by regulators. So regulators can turn the switch on or turn the switch off, and it could go dark or light all at once. The bond market doesn't go dark. It's open all the time. And so I thought, man, I could bring the bond market to the benefit of the real estate borrower, and it would be a huge benefit. So I started thinking about this back when I was at Morgan Stanley in about 1988. And I started to spend a little time moving away from residential mortgages to commercial mortgages, and then I stumbled into a deal, the first deal I looked at, and it was for an office building on 6th Avenue in Manhattan, kind of a main office A-quality corridor. And Travelers Insurance had agreed to make the first mortgage loan on that building at a 10-year fixed rate that was lower than the 10-year fixed rate treasury, the 10-year treasury bond, okay? So think about how insane this is, right? Travelers could have bought a 10-year treasury at a higher yield than they were making this crazy loan. It made no sense. And I said, all right, well, the one thing about the bond market is it's rational. There's something called relative value that governs. So you'll never see a triple C bond trading at a yield that's lower than a triple B bond or a triple A bond, right? I mean, there's relative value in the bond market. Well, in the real estate market, because it had been untethered to the capital markets, it was irrational. Irrational in a way that rational players couldn't play. So I had to wait. Well, I waited, and 3 years later, all those people like Travelers that had made mistakes found themselves suffering, and predictably, the regulators turned the switch off. And so the switch went off, and in 1991, you couldn't get a loan in the United States of America because every bank and every insurance company was told by regulators, you can't make any more loans in real estate. And all the foreign money had fled because they were suffering losses because they had gotten in at too high of a price, gimmicked by too much debt, poorly priced debt. Similar story to what's going on today, particularly in office and apartments, but similar story in general. And what I learned is that if you're going to be an agent of change, which is really hard, really, really hard. I don't know if Ed's young enough to actually pull it off, okay? I was 30-something at the time, and people used to say to me at the time, man, you're so young when they met me, and I was like, well, I don't think I could physically do this if I was much older than I am now. It was that hard. But I realized the window opened, that in a systemic collapse, new ideas are possible. It's very hard to change habits and behaviors and ask people to change the way they operate when things are going well for them. It's only when things are not going well for them that they're open to new ideas, maybe even desperate for new ideas. And that happened to me in the early 90s, and I saw this is a moment in time to create securitization of commercial real estate loans, to essentially package these loans as bonds and introduce them to the bond market and persuade them and bribe them with yield in order to have them start to play ball. And I created this bridge. I was fortunate enough to find a very the largest financial company in the world at that time, Nomura of Japan, to back me. And they backed me with significant balance sheet. And at the age of 32, from scratch, with no one working there, I literally started a company that within 1 year was the largest lender in the United States. And within 2 years was the largest lender in the history of the United States. And I had a very kind of famous career in the 90s. I was the Mike Milken of this industry and Wall Street in the 90s. And, you know, I use the Mike Milken analogy a little bit gently. I didn't break any laws. I didn't go to jail. I didn't get accused of any wrongdoings. But I created a market, which he did too. And he built, so what he did is he built a bridge between the corporate entrepreneur who needed debt capital to grow, but banks and insurance companies wouldn't fund them because they didn't have the pedigree. He built a bridge for them to the bond market. Well, I did that for the real estate industry. So that's the analogy. I look at what Ed and RedSwan and tokenization of real estate aims to do. And of course, we both talked about it, and we see a very, very strong similarity to what I was able to achieve in the 1990s. And I think much like the time that I was able to bring change about, a time of dislocation, a time of turmoil, and therefore a time of openness for new things, this is that moment in time. And so I do believe that it's kind of now or never. You know, dislocations happen once every decade or so, roughly, and they last for roughly 2 or 3 years. So I said to Ed last night, you know, if you don't get it right this time, you're gonna have to wait another decade for a chance to get it right. But I think the movement towards digital ownership, digital transfer, digital records is there. And I think now is the time to apply it to real estate where it makes the most sense. I'm excited to see what can happen and to help in any way I can. And as I alluded to, I think that the other thing I'll mention is real estate. It's interesting and important to note that securitization had been applied to every single financial asset before commercial real estate, which tells you kind of all you need to know about the commercial real estate industry, which is it's very slow to change. It's very, very backwards looking. It's very insular. It's very slow to adopt outsiders with new ideas. Very slow. I found that to be the case. But I was able to push it through because, again, I came at a time when there was no other options. And, you know, any loan was a good loan in a time when you have a refinancing and you were facing foreclosure. So you take whatever you can get. And that was the market I faced to create the market I created. I'm going to stop. One, because I want to have a conversation more than a speech, and two, because I remember very well when I was in college and how I hated long lectures no matter how good the speaker was. So I have respect for you. I did write a book. I want to at least mention that. My book is called Greatness is a Choice. It's really not about me. It's not. I could have written a book about me and my life, my career. A lot of people do that. I didn't feel that to be valuable to anyone. We all live interesting lives. We all meet people. We all have ups and downs. We all live versions of each other's lives. But what I did do was share, because I think I've lived a life where I paid attention a lot, and I'm a reasonably good communicator, I think. And so I created a book that's respectful of the reader, and that's why I think people like you guys will like it. It's a book of 69 short chapters. Each chapter stands on its own. It's no more than 3-page chapters. And it's meant to have the reader kind of let the idea hit them and own the idea or the ideology from their own perspective in their own life, rather than be cluttered with my own story that might get in the way of your story. Because we're all living unique, divinely inspired lives. We all have our own journey. We all have our own experiences that give us the specific feedback to make ourselves better. And I don't want my stories to get in the way of your stories. And so I wrote a book that is intentional in its design and its brevity. And I have had good feedback, and it's kind of like my contribution to helping make the world a better place. So I hope you find it valuable, and I'm relying upon people like you to not only read it, but if you like it, push it forward. So I'll stop. Happy to take any questions if there are any. And if there are not, I'll turn the mic over to Ed. Yes. So the question was, do I see today's dislocation similar to that of the 80s with the savings and loans? And I think the regional banking system could be analogized to the savings and loans. 70% of office building loans were made in the last cycle by regional banks, which doesn't portend good things for them because office building values have gone down quite a bit. I think it's very hard to predict anything where the government's hand is involved. You know, we've all, even the youngest among us, have learned that lesson, okay? We have a very, very, very fickle government. It changes dramatically from administration to administration. And so it's very hard to predict when the government's involved how things are going to play out. I think it's possible that the regional bank system itself can collapse and be ultimately shuttered like the savings and loan was. That's an extreme possibility, but it's not a 0% possibility. I think that there could be a lot of dislocation in commercial real estate because I think that prices have gone down for things like office and apartments by a dramatic amount, and many trillions of dollars, I think, of value have been wiped out because of that. So that won't be pleasant as it's experienced, and I think it'll have a ripple effect on the financial system and the economy as well. Yes?
Do you see commercial real estate because of things like that switching to something that's more community focused? Sorry. Wow. Do you see because of the people leaving physical workplaces, commercial real estate shifting towards more community-focused spaces over office spaces? Since
Well, I think that I financed a development. I think it was in 2017 or 18, and it was a construction loan made to a developer who was developing a community, really a community like you suggest, in Las Vegas. And the centerpiece of the community was Class A office. And so people thought I was completely crazy. What are you doing financing new construction Class A office? There's plenty of unoccupied office in the world. Does the world need more? And this community, it was a community. People didn't understand it was a community. And so the community is called the Uncommons if you ever visit Las Vegas. And it's got Class A office, it's got entertainment, it's got incredible food, it's got apartments, and so it's a real community. And I think that is one of the great lackings in our society. So I wrote a book that if you looked at my book, you'll say, well, it's a philosophy book. But I think that it is a philosophy book because I approach business as a philosopher. And I ask myself as an entrepreneur, what needs are not being met in the world today? And how could I help through my own efforts meet those needs? I think community is a huge unmet need in the world today, right? Just like, for example, I think health and wellness is a huge unmet need in the world today. And so I try to position myself in whatever I do, whether it's real estate lending or any other field I happen to find myself in, and I say, how can I bring my efforts to bear to help meet that need? And so I completely agree with you that real estate is going to have to, real estate is only a server of the needs of society, right? So if you think about what makes a good piece of real estate, it's a piece of real estate, a building that actually meets the needs or desires of the community. And a bad piece of real estate is one that no longer meets those needs and is therefore obsolete. That's the word people like to use, obsolete. And I think location, design, all that has to do with it, but also purpose has to do with it as well. And so I definitely believe community. And by the way, I believe that we'll see more new construction in many cities where there's buildings that don't meet people's needs and destruction of buildings that don't. Yes.
So I just want to amplify what you just said, because if you're in the building we're in right now, this is really thinking about that. And there was an interesting study in 2015 by the Brookings Institute that looked at the emergence of what's called innovation districts. And it's a global phenomena of reurbanization and looking at how you create placemaking. And I think what we're seeing post-COVID is, you know, where people seek back to offices, it's really highly amenitized facilities. It's building that doesn't just have a lobby, a security desk, and an elevator bank. It's something that actually invites you to participate in what the building delivers, whether that is community, innovation ecosystem, tech ecosystem, something where you can collide and people have a value beyond just an office space. As a matter of fact, if you head just to your office, you're kind of losing the value of community and ecosystem building. So, you know, I think we'll see a lot of those changes. That's my opinion, and I think I totally support what you're saying.
Yeah, and I think that if I go back to my book about philosophy from a guy who people would have characterized as a career financier, a career Wall Street guy, a career real estate guy, and wonder what is he writing a book about philosophy for? And it's because I think philosophy, which is the observation of human behavior, ultimately is how one needs to operate successfully in any business, right? If you decide you want to open up a bakery, you have to understand human behavior. Like, what do people like, right? How much sugar should I be putting in here? Or should I be using gluten-free ingredients? Or what location is more likely to be a location that people are going to stop to eat in my bakery, right? And everything is about human behavior, and I think that's the miss that people make so often in disconnecting business from understanding and constantly reevaluating their assessments of human needs and human behavior. And I think that human needs and human behavior are constantly evolving, and the people who will lose the trillions of dollars that I said has been lost in real estate are the people who fell asleep, who were buying things that solved people's human behavioral needs and aspirations 3, 4, and 5 decades ago, and stopped asking themselves about that real estate, does it meet people's needs today? They deserve to lose trillions of dollars, and they will, and they have. Yes.
I think it's very interesting what you're describing. Lots of opportunities and lots of things moving around. And I'm just wondering, you talked about this opportunity, you saw it in the 90s, you're seeing it today. How do you plan on taking advantage of the opportunity? I think I read a few things, some REITs and fundraise and things of that nature. Is that something you're comfortable talking about a little bit?
Well, I think that there are many ways to capitalize upon opportunities in a business like real estate. And there are many ways to attempt to take advantage of opportunities and find yourself being the victim of some bad choices, right? So in Wall Street, there's a metaphor in times of distress that I think is appropriate, which is the notion of catching a falling knife. So if you imagine a knife falling, you try to catch it, it's a very risky move, right? You're likely to get your hand bloodied. I think that there's a lot of opportunities today to catch falling knives, and I would avoid those. You know, my experience in history has taught me that's not a game that I would want to play, and I wouldn't recommend playing that game. So finding a building that was, let's say, once worth $200 million and now you could buy it for $40 million, and that seems extremely enticing, that building might need to be torn down. It might be worth nothing. But on the face of it, it seems like a great bargain. So I would avoid personally what I call, and what the industry might call obsolescence risk, what I call viability risk, right? So if you look at a building, whether it's an apartment building or a shopping center or an office building or a nursing home or any kind of property, and you're sure that's where people want to be, that's good. That's a viable piece of real estate. You're not going to catch a falling knife there. But if you look at that real estate and you're not sure, you're thinking maybe people don't ever want to go back to this place, I'm not really sure, that's something to avoid at all costs. There's no price that it's worth playing in that particular property. Yes?
First of all, thank you for coming to speak with us.
Oh, my
It's
pleasure.
very insightful. So my question was, hindsight is 20/20, right? What is one piece of experience that you would repeat or not repeat from your experience?
So the question, what would I repeat from the past or what would I avoid from the past that I've learned from my experience? I think that one of the things I have done well in my career is give up upside for certainty of success. If I really see, like in the early 90s, I saw this need for the bond market to save and the ability of being able to bring the bond market to save the real estate industry through securitization. At the time, I was running a very small company in San Francisco that I had started when I left Morgan Stanley with the backing of a finance company that was in the Cargill family. And I could have continued to do that and own 100% of my business. And then Nomura kind of came along and we started talking and they said, well, we'll give you substantial backing and you could build a real company on a much grander scale and you'll own less than 10% of that company. And I made that move, right? I traded 100% ownership for less than 10% ownership. And it was the right move. And I knew it was the right move. So there's a chapter in my book called Duality. And it's one of my favorite chapters because it talks to the fact that two truths that seem to be opposite can coexist. So now I'm going to tell you the same story and why I fucked up, okay? So the first part of the story is I made the right choice. I traded off 100% of a small company for less than 10% of a company that became a monster. I became very famous. I became financially secure. I made a difference in the world. I changed the game. I probably couldn't have done all those things, probably, if I had not made that move. One never knows, because I didn't do it. But I was thinking the odds were better if I made the move. On the other hand, if I didn't make that move, maybe I would have done it anyway. And maybe I would have had better control of my own destiny and not suffer the betrayal that I suffered that is so typical when you give up control of your own company and when you become a minority shareholder with a Wall Street firm, okay? And there's all kinds of ethical questionable behaviors involved in those. And big companies do things differently than, human beings. I would say big companies are generally anti-human, okay? And so when you decide to put your fate in the hands of a big company, you're asking to get bloodied at some point down the road. And I knew it in my heart that I was, but I made the trade with the devil because I also knew that the chances of me hitting the high note that I hit was improved by making that trade with the devil. So there you go, duality. I learned and reinforced both the good and the bad lesson associated with the very same move. And I both at the same time, if it's possible, am proud that I made the decision and regret the decision as well. All right. Well, anyhow, I'm very gratified to be invited here, and I hope I added some value to your life. I hope you guys give my book a chance. I'm very excited about what Ed and RedSwan are doing, and happy to be associated with them.